I'm going to fill in some of the holes and do it quite quickly, just to kind of bring forward the idea of how could we begin to envision a system that operates differently. And in a sense, the theme is how to make it safe for small startup banks to go swimming. And the thought here is that we have to both understand what crisis we're in, where things have come from, and then what it's going to mean to create space for alternatives. And we'll go through very quickly, obviously. And the point I want to make is that first there's the subprime crisis as it's broken out. And what we saw here was the use of too big to fail protection. We saw many small banks hurt. I'm speaking here from my U.S. experience, as you can hear from my accent. And many families lost wealth and lost homes. So the resilience of the economy was really hurt. Now, of course, that was followed, and this is critical, by a real destruction of the vibrancy of the macro environment. And we saw, for example, cuts in government transfers and spending, squeezing local economies, the European slowdown that's squeezing the UK, speaking of our local island, and quantitative easing as a device for essentially transfusing, let's say, liquid blood into the veins of the mega banks to keep them going. And these are banks that are not our friends. Here's just my favorite quote from Lloyd Blankfein, who basically said in front of the Congressional Crisis Investigation Commission that, we are a principal. We represent the other side of what people want. We are not a fiduciary. We are not an agent. Of course, we have an obligation to fully disclose, but we are not managing somebody else's money. Now, that's funny because as of late 2008, his bank is a bank holding company protected by the full faith and disclosure of the United States government and Treasury. Rather disturbing. So how to create space, and my theme here is that we've got to operate at two levels. We've got to have rules for mega banks to bound them, and we've got to look for opportunity and to create opportunities for banking alternatives. For mega banks, I mean, there's a list, and I'll be more precise in a minute when I give you a figure that we'll finish off with. But basically, here's the list, right? They've got to be fiduciaries. They can't be principals pursuing their own gain. We've got to outlaw predatory lending. This kind of loan subsidies that go to the big banks have really got to be reined in, and we've got to set limits on leverage. Leverage is really the devil. Off-balance sheet position taking, as is described earlier as speculation, has got to be reined in as well. And basically, their monopoly use by mega banks of the markets for liquidity, the way that the money markets have been complexified and made into a kind of nexus of networked relationships bound together forward and backward that is impossible to unpack. And thus that in a crisis freezes up and forces action by the central governments and federal bank and central banks. This has got to be changed. How about the opportunities? Well, there's some things we could say here, and basically, we need adequate cash flows in the communities that these local banks are trying to serve. You've got to reverse cuts in social and health services. There's got to be renewal to a commitment to affordable housing and to the supply of housing. You can't have communities that are being starved of cash and then ask entrepreneurs to be heroes. You've got to we'll need greenlining programs. And basically, community reinvestment would be helpful. If there is a new surge of financial literacy, we've got to link that to anti-predatory finance enforcement, and we need programs at scale. And so just to give you a picture, we move from the post-crisis, and we're in danger of a re-crisis, and it's going to go like this. So here's our big banks capturing liquidity. And they're doing that now, and part of that is by refinancing themselves, by renewing their capital stock. That's going to put us into a new crisis that will once again reduce credit flows, that will once again renew their commitment to predatory lending, which will, of course, feed this reactionary political atmosphere, which in turn will lead to more poison for the local markets, And that in turn creates a situation that's got to change. And just to say that, I mentioned this just to say we need more than just bank capital enhancement. We've got to work on speculation and basically avoiding predatory lending, because that's the only way that we can have, to avoid stagnation at the local economy, so that local banking alternatives have a chance to succeed. And they certainly would be enhanced if we had something like a public investment bank. Thank you very much.